we all go to our high school counselors, and your high school counselor says, do what you love. And forgive me for this, but I like to drink and gamble. So when I was a younger man, before I was married, I had a business partner. He and I owned 2 liquor stores in the Denver metro area, and we're building a casino in Blackhawk. Long story short, the casino project cost me both the liquor stores and my best friend. And one piece of advice I would give to anybody listening: when you go talk to somebody and you're going to invest your money either with them or alongside them, or they're going to sell you something, ask them when they have failed. And I don't just mean, where something hasn't gone right. I mean an utter abject failure. And that's what the casino project was. And I essentially had to restart my life at that point.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Podcast. I'm your host, Erika, and today I'm excited to be chatting with Mike Hills. He's been making serious moves as an investor and as a managing broker for Atlas Real Estate. Mike, it's awesome to have you here.
Erika, thank you for having me. I appreciate you having me on today.
Yeah, this is going to be great. So, Mike, first off, let's dive in for our listeners who may not be familiar with your world. Can you tell us more? How did you get in the real estate? What was that journey like?
Well, so little backup. So at Atlas, we manage right at 5,700 rental units. So I am our managing broker in 9 states. So operational in what we call the rodeo region. Of those 5,700 units, we own just under 2,000 of them in a joint venture with a hedge fund out of San Francisco. And then personally, I own 50 some rental units in 3 states. In Colorado, primarily, Arizona secondarily, and then I still have 1 property in Northern California where I grew up. So been doing this a long time. The way, frankly, I got into it was, I can get more detailed if you want, but I thought, hey, the word landlord's been around for 1,000 years because he who owned the land is the Lord. So I just figured I would buy real estate, and I've been doing it for 20 some years. And, right now is not very easy because the world is hard, but owning real estate, I believe, is the way to wealth.
Yeah, yeah, absolutely. When you were starting off, Mike, what would you say was instrumental for your growth in the real estate world?
So my best friend growing up, I grew up in Sacramento across the street. His dad, Bob, and I've told this story many times, was a landlord. And I would say he was an intentional landlord, but he was what I would refer to in today's world almost as an accidental landlord. And when I say that, what happened is somebody would pass away and, he and his siblings would inherit the house. So he would buy those people out, and over time acquired 6, 8, 9 rental units, something to that effect. And again, I was in my mid-teens, so I was paying attention, but not really paying attention. By the time I was in college, Bob sold off all those properties. He self-managed, which is a headache, and the world's made it even harder to self-manage. But what he did is he sold these properties off, and when it was all said and done, he had purchased his own land, general contracted or GC'd his own house, built it the way he wanted it. And when it was all said and done, he had, I don't know, $500,000, $1 million in cash in the bank, owned his land, owned his house outright. And I looked at that and said, man, if he did that kind of unintentionally, if I start when I'm young, I bet I could really build something fun.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So I graduated from college June 9th, 2001, bought my first house, closed on it September 1st, 2001. So less than 90 days after, and we can get into the lending, but for those of you that are old like me, my first house I bought with what's called a stated income loan, which just simply means you state how much money you make and they give you a loan, which is ridiculous. And that's actually what led to the GFC, or one of the factors that led to the GFC, the Great Financial Crisis in 2008. Thankfully for me, I put all my stuff on 30-year fixed rate notes because I didn't know any better. So I actually became a house hacker before millennials made up the term house hacking. I moved into my house, two of my buddies were moving in with me. My family was like, oh, cool, good job, son, American dream, bought your first house. Well, I only lived there for like a little less than 2 years, bought another place, moved in, turned the first one into a rental. And they're like, dude, what are you doing? I was like, I'm going to buy rental properties. And it's funny because fast forward, that was roughly 2003, 2004, something like that. Fast forward by the early teens, 2012, 2013, 2014, my family that had given me trouble because I was a landlord, they all started buying real estate that I helped them buy because they realized, like, wow, there is something to this thing. So that's my origin story, if you will, Erika.
I love it. And then to fast forward more into today, Mike, with the markets that you're in, can you tell us more about them and what kind of opportunities you're seeing there that investors should be aware of?
Sure. So personally, I think I said I own in California, Arizona, and California. As an investment company and a property manager, we buy and manage in Colorado, both sides of Kansas City, so Kansas, Missouri, Arizona, Nevada, so Las Vegas, Salt Lake City, Utah, and Boise, Idaho. We're operational, but haven't purchased anything in Atlanta, Georgia, and 3 cities in Texas. So and then we're licensed in other states. We're licensed in North Carolina, Florida, coming soon as Indiana and Ohio. Haven't opened those markets yet. So we're doing this actively all across the place. Where we are finding opportunity, it's really hard to buy and make the numbers work. Cap rates are hard, et cetera, et cetera. And if you know what I'm talking about, cap rates, that's the metric by which investors buy real estate. For your listeners, cap rates are really hard. Interest rates are high, expenses, taxes, and insurance, everything is up. So it's really, really hard to make numbers pencil. In other words, find deals that work. What we are actively buying, and I'm actually in the process with our company of raising a fund. It's Atlas Real Estate's first fund. So we're calling it Fund One. And what this is an open fund to accredited investors, but to generally our clients, family and friends. And where we're finding success is in what's called financially distressed real estate. When you say distressed real estate, most investors know that is something that is distressed, meaning in their minds, it is beat up. It needs money put into it in order to fix it up and flip it, or fix it up and rent it and hold it and then sell it for some future cost. For profit, which is exactly what it is. What we're buying is financially distressed real estate. So really new products, stuff that's built in 2022, 2023, or even newer. We're working on a deal right now that's been out of the ground, completely done construction, literally for less than 12 months. But what happened is, if you think back, any builder in today's world, they've likely, if they live in a major metro area, and this particular project that I'm talking about was built in Wheat Ridge, which is just a suburb of Denver. And what this guy's been working on this for 4 or 5 or 6 years. Why? Because that's how long it takes to acquire land, get through entitlements, get through the permitting process, build, and then take it to market. Well, 5 years ago, the interest rate environment was really good. Today, really not so good. And we all know how hard the world is. So this guy is upside down or over his skis. His project cost all in is a little over $12 million. We're under contract to buy it for $9 million. So that means this guy he's upside down $3 million. Why is he willing to do that? Because it satisfies his PG or personal guarantee.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And what happens is these local and regional builders, they're just upside down because they cannot sell their product because the world is hard. So they need somebody to come in, and he's not happy about it, but he's going to be able to at least walk away and not risk the rest of his financial life. The lender's going to be happy about it, and we're going to be happy about it because we're buying it at what's referred to as 25% below replacement cost, meaning that we get to buy it for cheaper than it would cost to build. So we'll sit on it, we'll rent it, and then at some future point, we'll turn around and sell it. And because they're individually platted units, we have what's known as exit optionality on the back end. We could sell it to a fund, we could sell it to an aggregator, or we could sell it to the retail American home buyer. So that's what we're doing. And hopefully, Erika, that answers your question. It's where we're seeing real opportunity.
Yeah, when it comes to finding those financially distressed properties, are you using tools or system, or are you leveraging your network? How are you finding them?
It's a great question. So a little bit of everything. So we have a team and a staff that actually is actively selling property management services. So we leverage that. We leverage brokers, both on the retail side and the commercial side. We leverage our owners that hear about deals. I mean, we've been doing this now a long time. So, at least in the regions that we're in, people generally know our name. And if they don't, they know projects that we've done before. So it's a lot of word of mouth, but we have a ground game around these things. It's hit or miss. So we underwrite a lot of deals. And then there's deals that we're like, nope, nope, nope. Or we like to be what we refer to as a quick no, but a long yes, if that makes sense.
Yeah, yeah, absolutely playing the long game there. Are there, when you're looking at these deals, what would you say are some of the non-negotiable red flags that make you say a quick no?
Math. So in the end, I think I'm a really cool guy. In the end, I'm just a big math dork. And this is all math. So when speaking to cap rates, we're going in on this one project at a 6.2 cap, which is unheard of. You cannot find that right now. So it's all the math. It is, what's the deal look like? What are the projected rents? What's the debt picture look like? What's the purchase price? And then we can fill in all the details after that. But those are some of the non-negotiables. It is all about purchase price, availability, time, and then how it's built. So, when you're buying brand new product, having some sort of warranty is really, really important because you don't want to assume the risk of the builder warranty on there, especially states like Colorado, where it's very unfavorable to the builder. So those are some of the non-negotiables, and it's just patience. I don't like to work with jerks either. I like to work with nice people that I can, if I'm willing to go have a beer with you and vice versa, I want to work with you. If I'm not, because I can't stand you, then I don't want to work with you. How's that?
Yep, totally makes sense there, Mike. Now, when we were chatting earlier, you were talking about risk there and how important that is to you when it comes to making a decision that, taking on the right amount of risk. For you, how do you, analyze that in a deal?
Okay, so this is a hard one. So risk is different. So how about this? Now I'm married and I have 4 kids, and I actually have something to lose. So I don't want to risk my portfolio for a hasty, a quick, or a bad decision. When I bought my first house when I was 22, and I literally had a negative net worth. Why? Because I had student loans from the college I went to. I went to the University of Denver, so go Pios. It's one of those things that at that point, I didn't have anything to lose. So who cares about risk? today, very, very different.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So one of the things when we're actively looking at these deals, first question for us is, do we have a personal guarantee or not? Personal guarantee, meaning that if the deal goes sideways, are we risking our personal assets? Or is this a non-recourse loan? Non-recourse would meaning the bank, if it goes sideways, simply takes back over the asset, not comes after us personally. So it is about risk. And then you get in again to the deal specifics. Where's the deal? What is the deal? Who's buying it? Who's underwritten it? What are the rents? How much do we know about the area? Et cetera, et cetera. But on the high level, it's what is the risk and what does it very, very real look like? If one of you approached me and said, hey, Mike, I want to put X amount of dollars into this deal or any deal, first thing I would say is, hey, understand that you may lose everything. How does that make you feel? And then we have a very real conversation about risk and consequences. Because what happens is when you're young, you think everything's going to be gold and everything's going to work. And then as you get a little older and you learn, you're like, ooh, that was a real risk that I didn't see coming. So I got to be ready for that. So that's how it changes.
Yeah, absolutely. There's a lot you have to think about when you decide to take on a risk there. And this kind of transitions great into my next question, Mike, because between being an investor, having managing the real estate, having property management, I'm sure things have gone sideways at one point. Maybe you completely had to pivot on a deal. Maybe, I had to do something, a situation with a tenant. Can you share one of those challenging moments on your journey and what you learned from it?
Challenging moments. There's been a lot. How about this? I got to go on. This is a big one. So, we all go to our high school counselors, and your high school counselor says, do what you love. And forgive me for this, but I like to drink and gamble. So, when I was a younger man before I was married, I had a business partner. He and I owned 2 liquor stores in the Denver metro area, and we're building a casino in Blackhawk. If you know Blackhawk, Colorado, if you know Denver, it's just a suburb 40 minutes away from the city, and it's where gaming was allowed. Think Indian casino, but not really an Indian casino. That's just not the way it works in Colorado. But you could, for those listening, that's kind of what it looks like. Well, we did this before the GFC, before the Great Financial Crisis in 2008. And long story short, the casino project cost me both the liquor stores and my best friend. And it sucks because I was the best man in his wedding. We could be in the same room today. We talk occasionally every now and then, but we're no longer best friends. And one piece of advice I would give to anybody listening, when you go talk to somebody and you're going to invest your money either with them or alongside them, or they're going to sell you something, ask them when they have failed. And I don't just mean, where something hasn't gone right. I mean an utter abject failure. And that's what the casino project was. And I essentially had to restart my life at that point. What was interesting, I joined Atlas after coming out of that giant mess. I've been at Atlas just under 13 years now because I also had rental properties. I had the house my wife and I lived in. I had 4 rental properties. I was able to protect that from the casino and the liquor store fiasco, but I failed and I was looking for something to do. And this was roughly 2011, 2012. And I was like, oh my gosh, I hung on too long. That was the thing with that project. I should have walked away sooner and I didn't because I thought it was going to work. It didn't work. And it was really, really painful. And then post-mortem, going back and looking in the eye and be like, who did what? What did I do wrong? How can I grow from this and do something better in the future? And sometimes you just get pinched by the economy. Like we thought it was going great. And then when the world collapsed in 2008, man, if the world hadn't collapsed, maybe I'd be still in the liquor store business and own casinos. I don't know. But I'm a happier guy now, but man, it was painful for a couple of years. So I think that answers your question, Erica, but it was, that's not something that we shared in our prep for this call,
Mhm.
but man, that was a very, very real painful time for a couple of years.
Yeah. Yeah, well, you're on the other side of that now. You have a lot of exciting things going on. Can you share, what's on the horizon for you and what you're excited about, Mike?
Yeah. So there's three things that I love to do. First and foremost, I would say I'm going to brag about our company a little bit. We built a program called the Uplift program. And what this is, we have a team that teaches our residents to buy real estate. So we call this the virtuous cycle. So it's Team Uplift, but it's the virtuous cycle. And if you're listening and you own real estate today, you fit somewhere in here. And if you're renting, you also fit somewhere in here. And notice the language that I use. I don't say we are tenants, I say our residents, because we take our residents and we teach them how to be homeowners. So when they move, hopefully what they rent from us is the last place they ever rent. They move, they buy their own house. When they live in their own house, hopefully someday they learn how to be investors, and then they move to be investors, and it starts that virtuous cycle over from resident to owner, from owner to investor, and then their investment starts the virtuous cycle over. Now, we've had owners come to us and say, I don't want you teaching my residents how to buy real estate. Guess what? I don't think I want you as a client then. Because if you look at the stats, home ownership is the baseline for marriages staying together, financial independence, college, all of these things in our society. And if we can teach our people, and I don't say our people, just our employees or just our residents, if we can teach humans how to own real estate, it raises the tide everywhere. And raising tide raises all ships. And I love that we're doing this. And it's so much fun to talk to the humans that rent our properties. And they think, man, they say these things. I've never thought I could own a house. And we can teach them how to buy real estate. It just makes it awesome. And it's such a fun thing. And I love that we do that. So I would say that's what excites me, number one. Number two, on the ownership side, I love the fact that we're doing our first fund, that we're buying these financially distressed deals. We have our this deal that we just went under contract on. This closes in, I don't know, maybe 6 weeks. Love that we're doing this because it's fun again. There's actually deals out there to do. We've been on the sidelines for a couple of years now because the world's just been really hard. So I think that's really fun. And then I just like teaching and talking not just to our agents. We have roughly 60, 65 1099 real estate agents who work for us, but also our employees and our property managers. And I tell them every time I get a chance to talk to them as a company, if you work at Atlas, whether you're 1099 or you're an employee, and you are not trying or learning how to buy real estate, you're letting the best this company has go by you. If you just work it as a job, it's fine, have a job. But if you let us teach you and come alongside you and show you how to buy and own real estate, man, that's the best that we can offer. And I'm really excited about that. So those are the three things.
Yeah. Yeah, wow. You have a lot going on there. Well, I have to go back asking about how you educate your tenants. I'm just curious, is that a part kind of the screening process that you're looking for people who eventually want to become homeowners, or is that more of whoever, ends up coming through the doors, so to speak, that you're offering that education to them?
So the truth is that as landlords, we can't say no. Depends on which state you manage in.
Mhm.
But if people can qualify, they have the right to rent the house. So
Right.
no, on the front side, on the application side, no, that's not something that we even talk about. On
Mhm.
the once they become residents, yeah, we're absolutely trying to educate them. And if you think about it, if somebody's paying rent, and they're renting a single family home, and it depends on the market. Obviously, this is market specific. Rent in Denver's higher than Phoenix, is lower than Utah, et cetera, et cetera. But if somebody's paying anywhere from $2,600 to $3,600 or $3,800 or $4,400 a month in rent, man, they can probably afford to buy a house. So what we do is we come alongside these people and just say, hey, it's open invite, it's free, costs $0. And if they want to come alongside us and have us work with them, it just makes sense. And what we've learned on the property management side, when our residents, when they join this Uplift program, what actually happens is they're better residents. They pay their rent on time better and faster and more consistently. They take care of the house better. They communicate with our property management team just a little bit better because it's more, we see them more than just a paycheck. We see them as the human that they are. And we know that if they do this, it's good for you, good for me, good for everything. And it's one of the core values in our company.
Yeah, that is that is really cool. I love how you're helping people while scaling your company at the same time. Mike, if someone reaching out today wants to connect, learn more, collaborate, what's the best way for them to reach you?
They email me. I don't know if I want to give my cell phone. So I won't start with my cell phone because, I just don't want to. But my email address is michael@realatlas.com. The company is Atlas Real Estate. Our website is realatlas.com. It's MICHAEL at REALATLAS.com. Just like it sounds. Michael@realatlas.com. I check my email frequently. But yeah, anytime anybody wants to talk, we can. Heck, if you want to join our team, depends on the market. If you're in Bangor, Maine, we're not going to Maine anytime soon, so don't call me. But if you want to join, great. And if you want to learn more, whether it's about the deals that we're doing or how we invest, please, anytime. I love teaching and I love humans.
I love it. Well, again, Mike, thanks for coming on the show. I appreciate your time, story, perspective. What you're doing in this space is really inspirational.
Awesome. Thank you, Erika. I appreciate you. Thanks for having me on.
And for our listeners today, if you got value from this episode, make sure that you're subscribed to the Real Estate Pros podcast. We've got more conversations lined up with experts like Mike who are out there building fantastic real estate businesses. We'll see you on the next episode.
Thanks, everyone.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.